for you?
I mean, it was okay. They were okay, and I was there with them. But what a nice couple.
How's it going?
Getting nervous, but I'm ready.
We closing this one. That's good.
Yes.
Oh,
Yes.
right.
Absolutely.
Yeah, the bias were
And
yes.
we are live, guys.
Are we live?
Yeah, we're live. You're late, a minute. So I like to start on time. So welcome, first episode today. Sacramento market update. Matty Adams, Amir, and we have a guest today, Rocky Forlano from Empire Loan.
Yes.
Welcome.
Thank you. Thanks
And-
for having me.
Today is gonna be our first podcast, and we're trying to get an idea of what we are the forecast for the month of April, and also we having you on a podcast today is really to talk about the 20% down payment assistance program or the Dreamfall Program.
Yep.
And it looked like it's gone as of this
Friday.
this Friday, right?
Yes. Yeah.
Yes.
It went quick.
It went
Can we
very
elaborate on that now?
Less than 10 days, huh?
less than 10 days. Yeah.
Yeah. So.
Let me go through the. I have
Oh,
just a
yes.
quick five slide presentation, and we.
Okay.
So really, that's the data for March 2023, and as you guys can see, we are actually down 47% from new listings from last year, and we still haven't ramped up the usual markets. So kind of tell you it's a little bit when we go through the slide, it was just 47% down less listings.
So this is saying half the people that normally sell their home, we're at half that.
That's correct. Yeah,
Wow.
that's crazy
Yeah, we're
news.
still in a strong. Inventory is low, so which means strong.
Well, not really. I mean, look at price per square foot dropped by 8% from last year, which is expected when you have the interest rate
That's
rising.
Not too bad, yeah.
Not too bad. It dipped quite a bit in January, but it wasn't. I mean, it was okay. I think it's just 3 or 4 right now for Sacramento County, and this is very interesting. So we have a low inventory, but yet the time on the market, the days on the market is 51 days. So what does that mean, right? It's like, we overpricing the property? The seller's expecting too much? Or we really don't have any buyers to buy the property at that price point?
Wow.
So it's kind of like
It's interesting because last year in March last year was 18 days.
yeah,
Yeah,
that
so
18 days
Big
with
difference.
twice as much more properties on the market, but this time we have 51 days on the market and after properties.
And is this also March is the first time that we've actually seen days on market decrease in what,
Since
almost
the
a year?
since the interest rate rose, right?
Yeah.
So this could be also due to the seasonality of the market, right?
Sure.
Yeah,
Spring
the
buyers.
spring buyers are coming up, and then you have
right.
all the energy coming in, and just people want to sell and just want to move out, and they just so
Sure.
there's coming out from hibernation from the market. So and this is also interesting. We have 0 months, almost 1.3 months of inventory. So I mean, it's just the data is a little bit all over the place, right? It's not like, oh, we have low inventory, low days on the market, a lot of people want to sell.
Right.
Now we have half of the inventory, 1.3 months on the months of inventories, which is extremely low. So still in a strong sellers market, right?
Yeah.
And so it's like, where we go from there, right? What do you think, Amir?
Well, see the curve how it's going right now, so it's unlikely we'll hit the lowest point was 1 month in inventory back in March last year. So I don't think we're gonna go less than that. I mean, we obviously curve is going down. So, but summertime is coming. Typically in summer, see the last summer, in June, July. So we went to straight up 2.2, 2.8 months of inventory. I think the inventory will come back up now.
Right. Is it safe? Can we
No,
go
go-
back to
sorry.
that? Does this, with it coming down 2.7 from January of this year down to 1.3 March this year, does that mean we have homes selling faster? Is that what it means? Months of inventory, so we're down to 1.3.
That means you have less home on the market than the capacity, the market absorbed the houses faster.
So if no one listed their homes again,
We have
we would run
1.3.
out of homes in 1.3 months.
Yeah, that's
Oh,
correct.
Yeah,
That's
and
the
that's the good explanation to whoever is watching this. So if no other houses get listed next 1.3 months, we will not have any houses for sale anymore.
Interesting.
Yeah.
So when you correct,
theoretical.
when you put all the data together, it's very interesting to see. Not only you have half the inventory when you have last year, you have 50 days on the market instead of 18, which is normal market probably for when you don't have a rush of buyers. But yet you don't have enough inventory, and the market is still absorbing everything. So it's
Trying
just
to absorb all this.
yeah, it's interesting data, isn't it? So just looking at like different points here, but
And March will, next month when we do is going to be changing because this California Dream Program make a big spike because suddenly
Yes.
instead of 2 offers on the properties, there are 10 offers on the property. That's I think it's like 500% more people coming out within
Had
just
to
10
be.
days.
Yeah, had to be. There was a huge
Yeah.
spike from everybody I talked to. Even we had some interest. My personal,
Yeah.
yes, I would definitely anticipate a spike.
How many closed? That's a different story, but yeah.
alright, so it's pretty cool data to look into often to just get an idea of what we are in the market. From what does that mean for the seller then, right? What does that mean for where do we need to price a property? Well, my assumption always been like we need to price within the comps of the market, and if the buyer want to pay more, let them be, right? If they are willing to pay, the buyer willing to pay more, then it's okay. But if you price higher than it's supposed to be, then it's going to sit on the market. That's probably why we're getting the 50 days on the market that we're seeing right now. So
Yeah.
from a buyer point of view, that we need to shop around more. We need to, because there's less inventory, we need to be more patient. We need to have more patience when we look at properties and be like, okay, well, it's not probably the right one right now. We need to wait. There's not enough inventory.
Right.
Yeah.
I heard something yesterday. Zillow came out with some numbers, and rent in March for the Sacramento market went up 3 times faster than other major markets. So if you're not buying a house, rent is going up quickly. So I mean, that's one thing to consider. The other thing they mentioned was home values for the first time in over 6 months. On average, so we're talking every major metro market, we saw an increase of 0.9% in value. That's the first time we've seen it shift and homes start to appreciate in months. So I started wondering, are we at that bottom? Did we finally hit that bottom where everybody's been saying, hey, home prices are going to go down? Are we there? Are we there? Are we going to start seeing home prices
I think it's more seasonal now. We not it will go up slightly, but I think it's gonna go. A lot of people expecting maybe it's gonna crash, right? And I wish we have a crystal ball. We cannot predict, otherwise we will be very
billionaires.
rich.
Yeah, all the people expecting a crash, all people expecting interest rate to go down again, all people and the sellers still want to the prices from 2021.
Yeah.
And I think the low inventory is mainly due because you have people that are stuck with their mortgages at 2.5% or 3%, and they just don't want to
I'm
move.
one of them. I don't want to give it up.
Yeah, exactly,
I
right?
don't want to give it up.
Like,
Yeah.
so why would you sell your house and get into something comparable for twice as much money you would pull out every month? So unless you really have to move out or you have something going on, then
Right.
you're not going to
Job
move. Yeah.
relocation, unfortunately, marriage, dissolution,
Right.
schools. Some people graduate, empty nesters. So life is still going to come into that.
Life
So-
will come into play, but it's not like the occasional shopper is like, okay, let me switch home now.
Right.
Yes,
right.
because the interest is low, let me upgrade. And now it's not the case because you need to have an increase, significantly increase in revenues to just to accommodate the change.
Sure.
in the-
Sure.
Right.
I did hear some good news on rates. If you want me to throw that out. there.
Sure.
I attended a webinar this morning. It was put on through Sierra Pacific. That's one of the lenders that we use as mortgage brokers for the down payment assistance. Long story short, the speaker, Dave Stevens, was saying that we do expect rates within the next 60 days, specifically around May 10th, to start coming down, and by year's end, on average, somewhere around 5 to 5.25, 5.4 to be exact.
That's good.
So more affordability, is very likely. And this
Okay.
is not just
Yes.
according to him.
Yeah.
If you research this a lot of people.
So less than what is it now? 6%?
Yeah, it's
Low
around
six?
6.25, 6.5. Depends on credit score and all that, but we should come down half to a full percent by year's end.
Okay.
Yeah.
That's what I'm hearing.
So that will affect, obviously, these numbers will be affected by a lot,
Yes.
because more people will be getting in the market, more people will be willing to buy now. It's 5% instead of 6% or 6
Exactly.
now.
I think you will see
Yeah.
your sellers whenever they see those rates come down.
Yeah.
They're like, okay, 5%, we can manage that.
Right.
Because
right.
I mean that's a great rate. If you don't account for rock bottom rates when the government was pumping money into the economy because of COVID, and
Yeah.
you look at normal markets, a 5% rate is not bad.
Right.
It's really not.
I agree.
In Europe, it's less sub 2%. In France,
Today,
yeah,
wow.
yeah, and they're still complaining about it.
Yeah. Yeah.
Yeah, so it's just a different market, right? So I wanted to go through a little bit what's going on in the market, and I think this one is a core property that came actually yesterday. It looked like a freaking spaceship.
It does.
It's like a
Or
Art
Mario
Deco,
Brothers.
style, 1977 in Fair Oaks. It's a 3-bedroom, 2-bath, and look at the inside of
You
it.
said it's in Fair Oaks.
Yeah,
Yeah.
this one is in Fair Oaks.
Close to the Fair Oaks village, is walkable to the river. It's very good location. You can walk to the shop.
Yeah, I'm gonna pull up on the map in a second. Yeah, this property is incredible. It's just a 1.3 million, obviously for 1900 square foot. You really want to get. This is very atypical property, right? It's very something you just. If you really want a specific look, that
Right.
would be your property.
Curb appeal. You
The
might
curb
call it,
appeal,
right?
or even the wow factor. I mean, just look at the first pictures, right? I mean, look at that.
That
It
is
just
great.
looks so cool, right? It's just
It does.
it's a pretty cool. That just came on the market. Kind of remind me of one property you saw last year.
Yeah.
Do you remember the address?
South
Was it South Cliff?
Southcliff, yeah.
Do you remember the number?
I'll find. But this property, by the way, is listed by Lion, so it's not by.
Yeah, it's just a property I found online.
Yeah.
So it's
Oh.
Lions Real Estate listing the property. It's right here. Angela Gitz by Lions Real
Yeah.
Estate. Yeah.
And Angela's great agent, so she's in business for a long time. So
But this one, so just talking about the neighborhood, it's actually pretty cool. If I go on Zillow here, you're nearly close to the riverbank here. You have all the park access,
Wow.
and you have another one, some very massive property also right here. It's kind of like the old part of Fair Oaks, when you're just close to the river, and they're just a very nice setting. And some of them have riverfront properties, huge lots. I mean, this is very massive. Even this one here, just across from the streets, it's also a pretty
Oh,
cool,
same
interesting one, right? The entire neighborhood, if you have the budget for like $1 million plus
Well,
mid-century, yeah, that's
Love Fair Oaks, especially this part. The
Yeah.
older Fair Oaks.
so that's pretty cool. We have one on a pretty atypical one too. We have one on the river too as well. We're listening together with
the
Amir.
one was actually 7715 Southcliff.
What is it?
7715.
So 7715 South Cliff.
We saw last year actually, in June 22.
This one was very. There's no more pictures inside.
No more pictures, they
Oh,
took
wow.
it down. But this was with indoor pool and more like Frank Lloyd Wright
style.
design. So
Yeah.
even they're saying that's undocumented piece of Frank Lloyd Wright.
But it's not even like the pool's tucked away to the side. This one had the pool right in the middle of the living room.
How cool
Yeah,
is
the living
that?
room was kind of like a U shape, and then you have the pool right in the middle of your house.
So
Like,
pool parties every day.
I mean, pretty much,
Pool
yeah.
parties,
And then
yeah.
just beautiful, kind of sitting a little bit on the top here, on the top of the hill, and a nice acreage. Yeah. And wanted to show you guys another one that we are looking right now. I mean, we're trying to sell this one here. It's on an island. Only 36 lots on this island. We're kind of midpoint between the bay, and very unique because these lots are not coming up on the market. Right, they're just like 36 of those, and they're building brand new multi-million-dollar property right here at the entrance here, and we are trying to sell this one right here on the market here. So pretty cool frontage property, again, just like beautiful view of the riverbank, and then just nothing there pretty much. If you like the wilderness and if you're interested in this, just this would be one of them.
Not too many houses in Sacramento on the island, so that's
Yeah, I thought I
There's
heard
a-
you say island. And
This
then
is
I
a,
see
this is a true
surrounded
island.
by
Yeah, they
water.
park the boat. They park the boat right here. You have a bridge access, little bridge access, and then that's it. One road, and everybody knows each other. There's half of the people living on the island are like full-time residents. The other are either living in Sacramento or in the Bay, and they're just coming over here to enjoy the boat
That
and
is
everything.
cool.
So
Very cool. I like to go fishing. Striper fishing is really good there.
yeah, that would be
Yeah.
you can do it from
you
from
can
the
do it
house.
from your
Every
backyard.
day. Every day. Count me in.
Yeah, that would be the idea, right?
I might be your first offer.
Yeah. So Rocky, tell us a little bit. What was this 20% down payment or Dreamfall program?
Okay.
Right, so
Did you have specific questions, or you want me to give like an overview?
just give an overview, just for the people who just didn't know, and what's happening right now for that specific program.
Okay, so California Housing Finance Agency, you'll hear a lot of us in the industry call it CalHFA. They are probably the number one, if not very close, source of down payment assistance for us in California. And they came out with a new program. It was released March 27th, and it was called the Dream for All program. And it was an equity share program. I keep referencing past tense was. I'll get to that in a moment. And what it allowed was up to 20% assistance. And with that, that could be used towards down payment or closing cost. And to sum it up, the way it worked is whenever somebody refinanced a second time or sold the home or transferred ownership, they had to pay that amount back plus 20% of the home's equity. So an easy example we kept giving folks was if someone bought a home for $500,000, they could get $100,000 on the down payment assistance. And then if they sold the home in 2 years for $600,000, that's $100 in equity. So they would have to pay back the original $100 they borrowed plus 20% of the $100 in equity for a total of $120. This program allowed people to buy homes that could not afford to buy homes before. Normal down payment assistance
Right.
that we see is anywhere from 3 to 6%. This being 20 really bumped the purchase power for these buyers. Our phones were off the hook. I mean, we have one.
We're lucky we got one in Elk Grove together.
We did.
And I lost one actually last weekend due to funding fed off, right?
Yeah, the lock you had to have, in order to reserve those funds and guarantee them to the clients, you had to have your rate locked. So if the loan officer wasn't able to get it locked in time, when it ran out last Friday. I got the email just after 1 p.m.
Yeah.
Done. Reserved.
So is it gone forever, or is it they're going to bring it back, or is it what is the idea here?
So officially, yes, as the funds become paid back. Now I don't know whether that means a year or two. We could speculate on that. But as folks sell these homes that they've purchased using these down payment assistance funds, those funds do get reinvested, and that program is going to come back. I've been getting a ton of questions like, hey, what about the deals that locked last week that fall through?
Right.
Is there going to be a line of backups? No. CalHFA covered that. They actually allowed the original amount was $300 million. They allocated an extra 20%, so they locked $360 million because they do anticipate 20% fallout. So they've already allowed more than they really have in anticipation of fallout.
And I heard, I mean, these are locked based on the reservation.
Yes.
Yeah, but most of them, like 2/3, are reserved, but not in contract yet. So I don't know if I mean that's a different story. So I mean, obviously we will probably know within a week or so.
Right. What is that saying? A couple apples can ruin the bunch.
Yeah.
Hopefully
exactly.
it wasn't too many. because the proper way was you were supposed to be in contract.
And then what?
And-
Then do
yeah,
your process and do
then-
the
Exactly. And then
So you had to do what, a training, and then you had to do like a phone call with like the counselor,
Yep.
and yeah, so that would be the two requirements, right? And then,
Yes, yeah. So yeah, it had to be in contract, and then there was the home buyer education, and this one, because it was shared equity, did have an additional course and a phone call. That phone call has been I mean, even today, that phone call is
Just
holding some escrows up. But I do know Cal Haffa and the training programs are doing everything they can, and they've been very great about working with us and expediting those.
okay. So what was the requirement to get in? So you had like a I think it was a FICO six above,
So
600 and above.
yeah, they based it on the area median income. So in our area, I'm rounding right around 85,000. If you made under that, you could have a credit score down to 660. If you were over 80% of the area median income, you had to have a 680 credit score.
Okay, and like
Is
income
there any
limit. Income limit, I think it was 200 for Sacramento County.
Yeah.
202 ish.
Yeah, roundings,
Yeah.
202,000. The household income had to be under that. And you absolutely had to be a first time home buyer, which I'm sure we've all said it 1,000 times. First time home buyer means you have not had any ownership interest in the most previous 3 years. So if
Right.
you are older and owned a home 10 years ago, guess what? You
You're
can be
still first
eligible.
time.
You're a
Yeah.
first
Yeah,
time
you
home buyer.
still own first time buyer,
Yep.
right?
Yep.
that's important to understand because a lot of people think, hey, I bought a house 5 years,
Right,
10
I've
years
done this
ago, and then
before.
I sold it, but I'm not first time buyer anymore. But you are if you haven't owned
The
one
last
years.
3 years. So
3 years.
yeah, 3 years, right?
Yeah.
So what people should do now? Because obviously the fund did run out, right?
It did.
Can they still put themselves on a backup list and just do all the programs requirements and everything, or is it like we just have to wait until we have more fund coming in?
So I've been getting a lot of questions, especially since Friday. There is no backup list. Everything I've heard is all speculation. I mean, I could talk to you about things that I may have heard and might happen, but as of right now, there is no second phase coming out. There is no backup funds for locks that fall through. But there are other programs. Cal Haffa still has their My Home and their ZIP program, which that was the pinnacle of down payment assistance for the last 5-10 years. Anytime somebody called
Maybe
me,
you can explain explain more in detail
Sure.
what my phone.
sure.
It's,
The best restructure that we found for folks that weren't able to get into the Dream for All is we look at doing one of Cal HFA's FHA loans, because they do offer a conventional loan or an FHA, and then they have their down payment assistance program called My Home, and that is a second lien that is up to, if you're using an FHA loan, it's up to 3.5%, so it covers the 3.5% down payment. And if you're using a conventional loan, it covers 3%. Again, 3% of the down payment. And those are here. There's no money going to run out on those. I worked up a scenario today, so we can.
But it's not as good as the 20%
No.
down, because now obviously what I've been saying to the buyers, like as long as you can afford the monthly payments, right, with the 20% down. Now it's like you need to look at the 3.5% down, how much you can afford, right?
Right.
That would be the
Right.
scenario.
Yeah, it's definitely, this program will not get somebody qualified as high as a 20% assistance, but I just want to make it clear there is still down payment assistance available.
Yeah.
Just the Stream for All has been reserved.
So we have a question from Akim. Will this program be available next year?
Our best educated professional guess is yes,
Okay.
but we don't have a specific date yet.
Okay.
And there, Cal HFA has its own website. Anybody can go on there. I think it's calhfa.gov, and they have a newsletter. That is actually where to get, or how to get, the most up-to-date information, because when they send the notification funds are almost out on Dream for All, that bulletin went to that list. So that's how most people got it. So anybody can sign up on that, and as soon as we get news that it's coming back, you can have it in your inbox.
Yeah, I'm going to put it in the description so you guys can
Okay.
can look at it, and then anything else we can recommend to the buyers right now in this market? After what we saw to the last month and a half of this crazy program, anything else they need to get ready for? As a loan, as like a down payment, anything else? I know it's hard to save money when you're already renting. It's just usually you're not out saving the market, right? Usually the market tends to outpass you, and then you don't get enough money just to get
Right.
from the savings. So
Right, yeah, prices go up quicker than you can
Yeah.
save. Yeah.
With inflation.
I mean, just the standard advice, is save money, save where you can. It adds up over time. I don't care if you can save $20 a week. Do it. Just save where you can. As you guys know, investing in real estate literally can potentially create and does generational wealth. Real estate is a safe place. I promise, and I dare anybody to look back in history and what do home prices do given enough time? They always go up.
oh yeah,
Always.
just enough time.
Yeah.
Yeah. So
Time works in your benefits.
always.
If you're not in a hurry, just take your time. Buy the first home. Just keep paying off the mortgage if you don't can afford the next one, but just
Right.
keep paying it off.
Exactly.
And then if
Get
you
in.
can reinvest into something else, just keep adding to it, and then eventually, yeah.
It's
Exactly.
like doing the real life monopoly game. Right, buy one house, buy a second house, third house, and then you buy hotel, actual duplexes, or whatever, and so on. You move on.
That's a good
So
point.
That's multi-generational wealth.
Right. But yeah, just save, make your payments on time, get your credit as high as you can. Talk to a loan officer. A lot of people think that we have an application fee or that we're too busy. Guys, we love earning the business. Sure, I love it when my phone rings and someone goes, hey, I need to get this mortgage, I want to apply on a house. Yes, love those calls. But we also love to earn the business. We love to answer your questions 1,000 times. I don't mind. Text me, email me, call me. And just get a basic understanding, because buying a home is so important. So important.
Right. I mean, house is probably the most expensive asset what most people will buy, and then working with real people, real professionals help. Right. So we're here to help all steps along the process. So to buy the biggest investment.
Yeah, so real estate professional, we're here to advise you which area, which property would be good for your current situation. Loan officers mostly advising you where to park your money, right? If it's you want to buy for an investment or for your family, how you can leverage that assets. Or some people call a house a liability, but I mean, if you use it properly, you can leverage that money you put as equity to buy something else, right?
Yep.
So, well,
Good.
well,
Is that it?
Yeah,
was
that's
that
it.
too much info?
I think
No,
we're
it's,
Are we good?
yeah, guys. Any question? Anything? Let me check the chat very quickly, and then, yep.
Well,
Thank you for stopping by here, Rocky, and then appreciate your time. I know you drove from Wolfsville, but
Hey, I'll do it anytime. Thank you guys, Amir, who
Yeah.
got to meet you the first time today, and of course Matthew having me here. Anytime, if I'm welcome back.
yeah, no
I'll-
problem.
I'll
Yeah,
let the-
we'll have you on the show.
Stay
you.
tuned. So we start. That's the first episode of our show.
Today is the first
Yeah.
episode of the show. We're going to go hopefully every Tuesday at noon, and different topics, and then how to
Right.
invest, what is the good marketing for properties, and then all this good stuff. So,
And it's all about real estate. So, like Rocky mentions, the real estate is the best way to build a multi-generational wealth, which I also agree. If you look from all millionaires worldwide, so 8 to 9 are made out of real estate. The rest of them maybe
the
with
stock
technology,
market,
the
the
stock
tech,
market, tech,
yeah.
So, but real estate never disappears. I mean, stock can disappear, companies can disappear. If you buy the house can burn down, but you can build the house. Yeah, land will not move anywhere, right? So you always have a land which is real estate. Yeah, so you can touch, feel, and then build another house, another building complex or whatever. So and then collect the rent or provide a roof for your family.
Exactly.
All right, guys. See you next time. Thank you, Rocky. Amir.
Okay.
Thank you
Next
guys.
Tuesday.
Tuesday.
See you guys.